Here's a detailed summary of the American Airlines (AL) 2025 Q4 earnings call transcript, designed for clear and concise delivery. Introduction. Today, we're summarizing the fourth quarter and full year 2025 earnings call for American Airlines Group. The call featured prepared remarks from CEO Robert Isom and CFO Devon May, followed by a Q&A session. Key financial metrics and performance. 2025 earnings per share, EPS. Fourth quarter adjusted EPS was 6 cents. Full year adjusted EPS was 36 cents. Revenue impact. Results for the year fell below guidance primarily due to a prolonged government shutdown, which impacted revenue by approximately $325 million, largely concentrated in the domestic entity. Premium versus main cabin. Premium cabin performance continued to outperform main cabin throughout the quarter and the year. In Q4, premium unit revenue outpaced main cabin by 7 percentage points. Managed corporate revenue showed strength, up 12% year-over-year, and has strengthened further in early 2026. International performance. Atlantic unit revenue was up 4% year-over-year and was the most profitable region in Q4. Latin America unit revenue remained under pressure, a trend expected to continue in 2026. Pacific unit revenue was slightly down year-over-year, but showed sequential improvement from Q3, driven by premium cabin strength. Management's forecasts and outlook. 2026 booking trends. After softer-than-expected bookings late in Q4, booking trends strengthened significantly in January 2026, with system-wide revenue intakes up double digits year-over-year for the first 3 weeks. Revenue growth. Q1 2026 expected to be up between 7 to 10% year-over-year, driven by domestic improvements and recovering demand. This includes an estimated revenue impact of $150 million to $200 million from Winter Storm Fern. Full year 2026. The company expects adjusted earnings per diluted share of approximately $1.70 to $2.70. Capacity growth. Q1 2026 projected to be up 3 to 5% year-over-year, inclusive of a 1.5% impact from Winter Storm Fern. Full year 2026 capacity growth is expected to be evenly balanced between domestic and international entities, with full-year growth anticipated around mid-single digits. Growth opportunities are focused on Philadelphia, Miami, and Phoenix, along with rounding out schedules in Chicago. Cost. Isom ex-fuel, ex-profit sharing, net special items. Q1 2026 anticipated to be up 3 to 5% year-over-year, absorbing costs related to flight attendant boarding pay and staffing ahead of summer peak. The impact from Winter Storm Fern is approximately 1.5 points. Full year 2026 unit cost growth is expected to be in the low single-digit range, around 2 to 3%, assuming mid-single-digit capacity growth. Debt reduction. Pulled forward debt reduction target to less than $35 billion by the end of 2026, a year earlier than previously planned. The focus remains on getting below 3x net debt and achieving a BB flat credit rating before considering shareholder remuneration like buybacks. Significant risk factors. Winter Storm Fern. This storm had an unprecedented impact, causing over 9,000 flight cancellations, making it the largest weather-related operational disruption in the company's history. The financial impact is estimated to be between $150 million to $200 million in Q1 revenue. Macroeconomic conditions. The company's full-year guidance assumes a stable macroeconomic backdrop for main cabin performance. Government shutdown. The Q4 2025 results were significantly impacted by the prolonged government shutdown. Latin America performance. Unit revenues in Latin America are expected to remain under pressure in 2026. Operational reliability. While investments are being made, Extreme weather events like Winter Storm Fern highlight the ongoing challenge of managing disruptions. Highlight strong balance sheet. The balance sheet is the strongest it's been in years. Labor agreements. Successfully ratified agreements with all major labor groups over the past 30 months, providing labor cost certainty. Fleet modernization. Fleet is in excellent shape with low capital requirements and no required aircraft retirements for the foreseeable future. Significant investments are being made in international fleet and premium seating. Customer experience investments. Highest Net Promoter Score for on-time customers in company history. Expansion of new flagship suite products and lounge network, Philadelphia, Miami, Charlotte. Introduction of complimentary high-speed satellite Wi-Fi for Advantage members on narrow-body aircraft, dual-class regional jets, and Boeing 787-9s. Transforming operations at DFW for future growth, aiming to be the largest single-carrier hub. Advantage program and Citi partnership. Record year for co-branded credit card program spending. The exclusive 10-year partnership with Citi, effective January 1, 2026, is expected to drive significant long-term growth. Restored indirect channel share. Achieved historical sales and distribution indirect share, with a focus on further growth in 2026. Centennial year. 2026 marks American Airlines' 100th anniversary, with a strategy focused on revenue potential through customer experience, network/fleet optimization, partnerships, and sales/distribution. Operational improvements. Investments in DFW operations, including a new 13-bank structure, new Terminal F, and facility enhancements, are aimed at increasing connection opportunities and reducing delays. Lowlights Q4 2025 performance below guidance, primarily due to the government shutdown. Winter Storm Fern impact. Significant operational disruption and revenue impact, particularly in Q1 2026. Latin America unit revenue pressure, expected to continue as a headwind. Pacific unit revenue slight decline, though showing sequential improvement. Most important statements from Management CEO Robert Isom on 2025 resilience and foundation. As we close out 2025, I'm extremely proud of the hard work and perseverance of the American Airlines team. 2025 wasn't the year anyone in the industry thought it would be, and no matter the unique challenges American faced, we did the hard work to build a solid foundation for our future. Our balance sheet is the strongest it's been in years. On 2026 strategy and centenary, we turn to the page to a new year, a momentous chapter in our history. As we celebrate American centenary, I'm excited about the opportunities that lie ahead for American as we begin to see the benefits of our work in 2026. Our strategy to deliver on America's revenue potential centers on 4 key areas. 2026 will be the year these efforts start to bear fruit. On Chicago's strategy. We've been flying to Chicago for 100 years. It's strategically important. It is something that we're gonna grow back to where we were prior to the pandemic. We would expect that it returns to the average profitability of our hub network. On Winter Storm Fern, the impact of the storm is as significant as we've ever seen in American. Ice and freezing rain have significantly reduced operations. Over the past 4 days, we've had to cancel more than 9,000 flights, making this the largest weather-related operational disruption in our history. On the future, we have a focused plan this coming year to deliver on our revenue potential. We have a fantastic team. We do a great job of producing an efficient level of capacity and making sure that we're taking care of our customers. So, appreciate the interest and look forward to delivering for our customers and our shareholders. CFO Devon May, on Q4 financials and shutdown impact. Excluding net special items, American reported fourth quarter adjusted earnings per share of 6 cents. These results came in below our guidance, primarily due to the prolonged government shutdown, which impacted revenue by approximately $325 million. On January booking strength, following softer than expected bookings late in the fourth quarter, bookings strengthened meaningfully in January. System-wide revenue intakes for the first 3 weeks of 2026 are up double digits year over year. On Q1 2026 outlook and storm impact, for the first quarter, capacity is projected to be up 3% to 5% year over year. This is inclusive of approximately 1.5 points impact from Winter Storm Fern. First quarter revenue to be up between 7 to 10% year over year. This includes an estimated revenue impact of between $150 million to $200 million from the ongoing Winter Storm Fern. On debt reduction progress, we are really pleased with the progress we've made on the balance sheet. We need to get inside of 3x net debt. That was our longer-term stated goal. We want to get to a BB flat credit rating. On 2026 full-year guidance, for the full year, we expect adjusted earnings per diluted share of approximately $1.70 to $2.70. This summary provides a comprehensive overview of American Airlines Q4 2025 earnings call, highlighting key financial details, future outlook, and management strategic priorities.